A seismic shift is unfolding in the media industry with giants like Disney, AT&T, and Discovery making strategic moves that are changing the game. This shift is shaking up the landscape and creating a fascinating new playing field. Let's start with Disney. The Magic Kingdom has been facing a dragon of a challenge with its direct-to-consumer segment, especially Disney+. Despite its magical content library, Disney+ is struggling to become profitable. The platform's subscriber growth has slowed, and its average monthly revenue per paid subscriber has seen only a slight uptick. The initial estimates for Disney+ subscribers were much higher than the current numbers, casting a shadow over the platform's future profitability. Adding to the intrigue, Disney has decided to reinstate dividends, paying 30 cents to shareholders every half year. This move has raised eyebrows, as some believe these funds could have been better used to bolster Disney+ and address the challenges in the company's core business. Now let's turn our attention to AT&T and Discovery. These two media titans recently announced a merger agreement, leading to the creation of a new standalone media company. This news has caused some panic among income investors due to the expected dividend cut. However, the merger is expected to create significant value. The new company is projected to have higher revenues and a larger content library than its streaming competitor Netflix, which could position it well in the streaming wars. Despite the initial shock, this deal could be a positive move for AT&T's growth potential. The dividend cut will be used to help grow the company, and the new company may have a high valuation that allows AT&T investors to reinvest without losing income. These events have set the stage for a fascinating battle for market dominance in the streaming industry. As these media giants navigate this new landscape, who will come out on top is anyone's guess. One thing is for sure, though: the game is changing, and it's changing fast. In the midst of these industry shakeups, activist investors are playing a crucial role in shaping the future of these companies. Take, for instance, Nelson Peltz, a heavyweight in the world of activist investing. Through his investment firm Trian Fund, he's been seeking multiple seats on the board of the Walt Disney Company. The motivation? Trian believes that Disney shares are undervalued, indicating a potential opportunity for increased shareholder value. But Peltz isn't the only activist investor making waves. Look at the recent success of Engine Number One. This activist hedge fund managed to secure 3 board seats at ExxonMobil, pushing the energy giant to address climate change and expand beyond the oil and gas industry. This is a clear demonstration of the power activist investors can wield, nudging even the most established companies towards change. And then there's General Electric, a company that has been facing its share of troubles. Leadership changes, accounting issues, and a declining share price have all put the company squarely in the sights of activist investors. Trian, and by extension Peltz, have welcomed GE's recent decision to split into 3 core segments: GE Aviation, GE Healthcare, and GE Renewable Energy. This move is seen as a restructuring strategy that could potentially revive the company's fortunes. So what's the takeaway from all this? Activist investors are not just passive spectators in the corporate world, they're change agents, pushing for strategic shifts, financial restructuring, and operational improvements that could potentially yield significant returns. Activist investors are clearly leaving their mark on the industry, pushing for changes that could potentially yield significant returns. As we navigate through these turbulent times in the media industry, what could the future hold? In the wake of recent shakeups and shifts, we're left pondering the potential outcomes. Let's start with the AT&T and Discovery merger. This move could birth a media giant, boasting higher revenues and a larger content library than Netflix. As we've seen, content is king in the media world, and this merger could potentially create a new reigning monarch. Meanwhile, Disney is in the throes of its own battle. Despite challenges, particularly in its direct-to-consumer segment, the company is striving to make Disney+ profitable. With a goal set for the fourth quarter of 2024, they are up against significant operating losses and slowing subscriber growth. However, if Disney can turn the tide and overcome these hurdles, we could see a resurgence in their profitability and market dominance. And let's not forget the crucial role of activist investors. These financial mavericks are not just silent shareholders, they're active contributors to the direction companies take. As we've seen with Nelson Peltz and his investment firm Trian Fund, they can push for changes that they believe will enhance value and align the board with shareholder interests. The media industry is no stranger to activism, and we can expect this trend to continue. Whether it's advocating for strategic changes, financial restructuring, or operational improvements, these activists will continue to shape the media industry's future, one investment at a time. The media landscape is evolving, with new alliances being formed, old partnerships disintegrating, and fresh strategies being implemented. As we stand on the precipice of change, we can only speculate on the outcomes. Will the AT&T and Discovery merger create a new media titan? Can Disney overcome its challenges and make Disney Plus a profitable venture? What impact will activist investors continue to have on these companies and the industry as a whole? Only time will tell how these dramatic changes will play out, but one thing is certain: the media industry will never be the same again. As we wrap up this deep dive into the media industry, we invite you to stay connected with us for more insights. Don't miss out on future deep dives, discussions, and dissections of today's hottest topics. Hit that subscribe button, give us a thumbs up if you found this content valuable, and share this video with those who you think would benefit from it. In an industry that never sleeps, knowledge is power. So, let's continue this journey of discovery together, staying informed and staying ahead. Thank you for joining us on this journey through the evolving landscape of the media industry. Until next time, stay informed and stay ahead.